Once again, the startup space is seeing huge activity with fundraisers and acquisitions. I'm Radhika Udas and a very warm welcome to you to Daily Dispatch. The companies that have big announcements today are Cure Foods, Furlenco, and Delivery. In our first story today, food tech brand Cure Foods has raised $13 million in funding led by Iron Pillar, Northstar, and Binny Bansal. Cure Foods has been acquiring a lot of cloud kitchens in the last few months. It operates on brands like Eat Fit, Yum Lane, Masala Box, and more. Now, with this fund being pumped into the company, they will be acquiring digital food brands across the geographies. In our second story today, House of Kiraya, the brand that was formed by furniture rental startup Furlenco, has raised $15 million from TradeCred. This latest investment is coming in after it raised $140 million in the Series D funding round some time back. With this investment, Furlenco will be expanding its operations in India and exploring international markets that includes the Middle East. In our third story today, in a move to further strengthen its B2B capabilities, logistics company Delivery has acquired Bangalore-based Spoton Logistics. Spoton was acquired by Samara Capital and Exponentia together in 2018, and they are now making a full exit for cash. The acquisition is focused on improving logistic clients' businesses through technology, network, and infrastructure investments.
All right. Well, moving on to our second segment, I have with me someone who's just become a unicorn with a $150 million funding. Thank you very much for joining us today, Amrit. We have Amrit who's joining us from Zetwerk. Thanks very much. I want to begin by asking you a little bit about this fundraise, $150 million. What does it really mean to you? And considering that this really leapfrogs you into a unicorn status, so tell us a little bit about the fundraise and what it means to become a unicorn.
Thanks for having me, Priya, on today's show. I think it's an important milestone for us for sure. Like we started the company 3 years ago with a vision to reimagine and digitize manufacturing, and the latest round just gives us more kind of ammunition to pursue that goal. At the same time, while we have turned a unicorn, as you mentioned, I think another interesting milestone for us, even more important one, is we just turned profitable as well as a company. So so what it means is that while we are growing at the high speed and high velocity, we are growing in a very sustainable manner. And our aim when we started the company was to build an institution that outlives us, and hopefully we have all the right tools to pursue that goal.
Right, Amrit, tell us a little bit about how these funds are going to be used, and if you could sort of give us a brief in terms of what the allocation is going to be like.
Yeah, I mean, fundamentally, Priya, we are a technology company. So our bulk of our investments go into building great software. Great software takes time. It takes a lot of understanding of the market, and it takes a lot of investments. So primary use of capital will be to make sure that all the things that we have built, we continue to stay relevant, we continue to stay ahead of the market. So we'll allocate capital there. The second major area where we will allocate capital is from a market standpoint. Last 1 year, we have expanded outside of India. Today, almost 20% of our revenue comes from international markets, primarily led by the US. Again, these are all very early, and they need initial pool of capital to make sure that the business can take off. So we will be pursuing these two avenues largely.
Right. I was just reading a little bit about what your view is on being a unicorn versus profitability. So I believe being a unicorn is less important than being profitable for you. Tell us a little bit about what the two really mean for you at large.
Yeah, I mean, those are completely independent goals. I think that's one thing to be aware of. Like being profitable means that the growth that we are having is sustainable. That there is a accepted willingness to pay from customers on what the service we are offering. It establishes strong unit economics, and it establishes a culture, more importantly, because companies are nothing but a collection of people. And if you establish a high burn culture early on, often very difficult to change that. And that's something we felt that we wanted to have that discipline from day one. and being frugal, being strong, having strong unit economics. It is very, very important, because these things are very difficult to change 3 years, 5 years in, because people will get used to a certain style of work. So for us, just the fact that we're able to turn profitable very early in our journey signifies that, at least to us, that we're building the company in the right.
You spoke a little bit about growing your international business in terms of strengthening the vertical further. So, what is your vision in terms of how big will the international business be, maybe 3 to 5 years down the line, considering that you are pumping in aggressively into the international markets as we speak?
Yeah, I mean, before I answer that in a very tactical way, like what's happening globally, Priya, is a lot of manufacturing spend is moving to countries like India. Largely, it is being driven by the redesign of global supply chains, where Western countries were predominantly buying from one single country, which was China. Today, these same companies have realized that COVID and other situations can make that strategy weak, and hence diversification of supply chain is an important theme for a lot of these companies based out of Western markets. We are essentially just making that process simpler for all of these Western companies. That look, you're already exploring markets outside of China. India, we can offer India to you in a very easy manner. That's broadly what's happening, and Indian manufacturing is also coming to age at the same time. So these are two different trends which are happening at the exact same time. Companies are looking to diversify, and Indian manufacturing is also coming of age. We see our role as catalyzing both of these and making sure that India does justice to the opportunity that is ahead of us. So we look at it from that lens, and if you're able to solve for that, then growth is an outcome. So hopefully we will continue to be able to grow the business in the same manner. Today, 20% of our revenue comes from these markets. And as we grow the business 4x, 5x, we hope to maintain that same velocity.
I also want to talk to you a little bit about acquisitions, considering that inorganic growth of business is also a key pillar of strategy that you had spoken to us about last time as well. So tell us a little bit about what your view is on acquisitions, and are there specific areas that you'd like to explore in terms of inorganic growth?
Yeah, I mean, again, it's primarily software led. See, what happens is it's a big problem that we're trying to address. We are present in multiple industries. Though we have a lot of resources to do a lot of the things that we want to do, but we also recognize that we can't do everything ourselves. It's not possible. Often there are people who are more focused, while we are spread across a wide range of industries. Sometimes folks who take a very, very focused approach can solve the problem better. But they often hit barriers to scale. They're able to solve problem in that very niche market, and then they struggle to take it forward. I think that's where our partnership with these companies can be very, very strong, because we understand what it takes to take something to scale in a short amount of time. And that's where we are looking to partner with companies who have solved very specific industry nuanced problems, and they and us can partner and bring it more to the mainstream. That's the dominant thought process. Of course, M&A is tricky. It's difficult to pull off, so we don't want to do a lot of them, but we have budget to do 2 to 5 this year.
All right, so 2 to 5 acquisitions is what you're targeting this year. A final question before I let you go: in terms of revenue, have you revised revenue targets going forward, considering that yes, the macro market is changing, you're getting more aggressive out there in terms of business, and opportunities seem to be growing. So tell us a little bit about your target for FY22, and if you've revised this as per earlier estimates.
Yeah, I mean, Priya, in FY21, we grew our revenues 3x. In FY22, we're looking to grow our revenues at least 4x. So the business is the largest it has ever been. At the same time, we are growing the fastest we've ever grown. Bulk of this is because today, the effort it takes to acquire a new customer for us is the lowest it has ever been, because most companies have already heard about us, not through marketing, but just through word of mouth. And we are looking to spend a little bit more in marketing and getting our message out that, if you're constrained by manufacturing, here is one company who can offer a very plug and play solution for you. So, we are prioritizing growth above everything else. But at the same time, as we said earlier, it will not be flaky growth, but sustainable growth.
And if you can quantify that, put a number to that. What would
Yeah, we're
revenues
looking
at the end of
we're looking to
FY22?
at least 3,500 odd crores of revenue. So,
All right, Amrit, it's a pleasure speaking with you again. Thank you very much for your time, and we wish you all the very best for your growth and ambitions going forward. Thanks so much.
thank you so much for having me.
That's a wrap to today's episode. We'll see you again at 5 p.m. tomorrow. Until then, have a good evening.